I guess, until 2020 when we started to emerge from that bear market. But what happened during that time is that we diverged from just being Dash Masternode proof of stake. We sold some of that. We bought Bitcoin. We diversified. We invested in Cosmos Atoms. So we made a lot of moves at the bottom of the market when these tokens were worth nothing. We went into DeFi when DeFi was, just getting going. We came into 2021 a much strengthened and more diversified entity, and that worked out really well for us. And I think our stock peaked at $2.20 in early 2021.
Which
We
makes
raised
it what kind of market cap?
quarter billion, 300 million, and then we raised 40 million at that time. And we took the 40 million and we were more careful with it this time. So we have most of that money still. We didn't lose it in the bear market.
Okay, welcome everybody for a new episode of Bitcoin Equities Talks. Today I'm with Cale Moodie, the CEO of Neptune Digital Assets, a listed company that is part of our Bitcoin Equities universe. So please, Cale, present yourself and your company.
Yeah, so I'm Cale Moodie, and I'm the CEO of Neptune. And I've been in Bitcoin, in the industry since 2014, and we have this wonderful, unique company called Neptune Digital Assets. We're trading on the TSX, we're trading on the OTC, and we're trading on Frankfurt. And I've been in this business for a while. So what can I tell you?
How did you start first into Bitcoin and cryptos in general? Because I saw you not like just Bitcoin only focused, but you expanded a little bit more.
Yeah, so my story really is I'm actually a chartered accountant, CPA in Canada, and I've been in the business for some time. I worked in public practice for some years at KPMG, and then I moved into capital markets, and I got into gold. And gold is unique in that it has that element of scarcity, and I could see that we had some issues with quantitative easing and money printing. And so I was looking for, hey, what's the asset that's going to sort of counterbalance that? And gold was that asset for me. So I spent some time being a bit of a gold bug. And then Bitcoin came along in 2014, 15, and I sort of dove into the white paper and I saw, hey, like there's these similarities between gold and Bitcoin. And so I learned as much as I could about Bitcoin, and it was quite fascinating. And actually in 2014, we tried to take a company public called Bet Noir with a group of guys, and it was going to be our first public Bitcoin crypto company in Canada. And that sort of fell flat just because nobody understood it, and we were just in the space too early. So it was pretty neat time because I think at that time Bitcoin had moved from $200 to 1,000 or something like that. So everybody's really excited about that. And then of course we had the full cycle, and it came down again, and the company didn't go. And fast forward to 2017, we started what was going to be, it's called Neptune Assets Group, and it was going to be Neptune Digital Bitcoin Trust. And so we tried to do basically a Bitcoin trust back in 2017. So we were very early to the market again, and that fell flat. We went all the way to the Ontario Securities Commission, presented this, and they said, this is a novel asset class. It's just not going to fly. And they sort of shrugged it off. Well, fast forward to now we have ETFs in Canada. So eventually they came around, but we were in the space too early. So we said to ourselves, hey, what can we do here? Let's attempt to do a public company that's fully exposed to cryptocurrency and is an operating business. And so this is the inception of Neptune Dash. And that was in 2017. So we created this company called Neptune Dash, and we literally did proof of stake Dash masternodes. And that was our entire business. And we raised $20 million, and we put it all into Dash, which was, in hindsight, was not the best move. But it was, it was an experimental time, and Dash was one of the top cryptocurrencies. So I think it was top 5 at the time. So we put it all into Dash. Yeah, we built these masternodes, and the masternodes, it was pretty cool. They were kicking out revenues and rewards, and we had this little operating business with the cryptocurrency exposure, and so a lot of people like that. But again, the cycles are unforgiving, and we went public in 2018, and that was sort of the peak of the cycle. I think December 17 and into the early January, February 2018, things started to sort of collapse, and that took us into probably I guess until 2020 when we started to emerge from that bear market. But what happened during that time is that we diverged from just being Dash Masternode's proof of stake. We sold some of that. We bought Bitcoin. We diversified. We invested in Cosmos Atoms. So we made a lot of moves at the bottom of the market when these tokens were worth nothing. We went into DeFi when DeFi was, just getting going. So we came into 2021 a much strengthened and more diversified entity, and that worked out really well for us. And I think our stock peaked at $2.20 in early 2021, and we
Which
raised
makes it what kind of market cap?
quarter billion, 300 million.
Okay.
Yeah, yeah. And then we raised 40 million at that time. And we took the
Okay.
40 million and we were more careful with it this time. So we have most of that money still. We didn't lose it in the bear market. And
So
so,
you went from 20 million initially
yeah.
down, I suppose, to maybe a couple. If you were invested just in Dash,
Oh, right. Yeah. I
you
mean,
must have suffered a lot.
yeah. So we raised the 20 million and we were probably down to like a few $100,000 left in
A
our
few
bank
hundred
account.
thousand. Wow. Okay.
But we did have the cryptocurrency, right? We had no cash, we had some crypto. But the crypto, it
Yeah.
was worth a few $1 million because it had come off 90% at the bottom
Okay.
as it does. But then 2020 things turned on again after they just
Okay.
flooded the
Yeah.
market with money, with easy money, right? And so that really fired things up again. And so, our share price at the bottom, I think we were 6-7 cents. Today we're
Wow.
trading at 32 cents today, which seems low to me still, which is a good indicator that retail isn't really paying attention yet. The things that move, some of these tokens have moved 100%, and think people are still on the sidelines, whether they don't believe it or it's high interest rates, people are paying down debt instead. It's another something to talk about, but so it's been quite a journey for us, and we adapt to the changing blockchain sector, and it's always changing. There's always new exciting things, and we can go on for hours about all that sort of stuff. But we did really well in the DeFi space. We took that and we took that, ran with it, and we did at one point in time we're doing a couple $1 million a month just in DeFi revenues. And
Okay.
so we were able to take those DeFi revenues and flip them into Bitcoin. So we're very Bitcoin focused and we're Bitcoin centric, but we use a varying number of investments and angles to get the Bitcoin. And we're not true believers in proof of work mining, just because it's very difficult, very finicky, and the margins just frankly aren't that great. So we do have some proof of work mining, but it's much more beneficial for us to have these small sort of proof of stake mining engines where we have like our bag of delegated Cosmos Atom that's earning rewards, and we take those rewards and we can buy Bitcoin with that. Same for like Sol, or same for Dot. So we have all these little mining engines, proof of stake mining engines that require, no overhead, no capital, no personnel issues, no downtime, no curtailment. So for us, that's been great. And because we got in early, right? Because we're buying these tokens at the bottom of the market, staking them. So not only do we get the appreciation on these alts, which can be pretty fantastical. I mean, I think Sol is up 200% this year. So I mean,
Mm.
Solana's done incredibly well. Dot's done pretty well. Cosmos Atom sort of languishing a little bit, but it seems to be coming off the bottom. But all these tokens generate more tokens for us, and so we take those revenues and we buy Bitcoin with them. And so that's our goal, is just to accumulate. And then we do some sort of exciting tech stuff on the side that we think our investors will like. We have this investment in SpaceX. I don't know if you saw that, but we're big fans of SpaceX. We're sort of nerd out on that, and we know our investors love that. So, in SpaceX being a private entity, unless you're invited to the table, you're never gonna hold that stock until it's public, and it's not public yet. So this way, people can actually own a little bit of SpaceX by buying our stock, which is pretty unique.
Oh, wow. That's no, I hadn't seen it. So how
Yeah,
did you get a piece of SpaceX?
we got
How,
invited to the table. We got
okay.
invited, yeah. So you got to be invited really to get a piece of that. So you got to know the right people, and so we did, and we were, and so we bought. We have about I believe $2.5 million worth of SpaceX, and
And when did you buy them?
over the course of the last year, so two different tranches. And we'll
Okay.
probably top up again. We'll probably buy some more because, I believe it's going to be, $1 trillion plus company. Once they get to the moon, that's going to be pretty crazy. Even when they get to Mars, it's going to be fantastic. I expect Starlink. Starlink is great. I use it at home here, as we were talking earlier, when it doesn't cut out because the satellites move. So when Starlink goes public and does an IPO, that's going to be quite lucrative for us. So it's a fun little side investment. I mean, it's a very small piece of our overall,
Yeah.
NAV, but it's fun to have that exposure. So that's another thing that's very small that we can talk about. But at the end of the day, we're Bitcoin centric, and we're trying to build that Bitcoin nest egg as quickly as possible.
So if I look at your balance sheet today, how is it split percentage wise?
Yeah, so I have it right here in front of me. So I mean, you're gonna see, yeah. So you're gonna see about a third of the values in Bitcoin, another third or a little less than a third is cash, and everything else would be proof of stake and some other assets like SpaceX, and we have some real estate and stuff like that.
Okay. Okay, I got
And
it.
so the third Bitcoin, yes, we're trying to grow that. So right now we have about 315 Bitcoin, 316, maybe 320, something around there, 300 something. And that's growing every day. So we're never selling that. That just sits in cold storage. Our different mining operations just sort of feed Bitcoin into that. And we're holding for the long term. I mean, we're not looking to even sell that this bull cycle. I mean, that's 10, 20 years out. We just expect that to grow, the balance to grow, and the value to grow. And
Okay,
being true, yeah,
and I mean, I've had like the similar uh, not background, I would say, but timing in terms of adoption of Bitcoin and discovery and trying to find solutions. We came up with our Bitcoin equities ETFs after having spent years convincing, like we had to apply everywhere in Europe to find one
yeah,
regulator that accepts our ETF, although it's listed company, so it's just a stock ETF, so there's no Bitcoin in us, but still
yeah.
because the word Bitcoin was like
Scary. It was
rat
scary, but yeah,
rat poison squared, as as some would call it. But but then I followed also the ICO craze, I would say. So you had like Dash, I remember, and
yeah.
you had a lot of all these promising projects that collapsed.
Hmm.
So I managed to avoid them PA because I said to myself, like, I'm not able to know the technicalities of each one and the use cases of each one.
Yeah.
So I'll stick with the blue chip. It was like an easy solution. So when everything dropped, I was happy that I have chosen the blue chip. So when I saw the DeFi, etc., coming back, I was like, okay, I'm not gonna fall again. I managed to avoid the ICO craze. I'm not gonna fall into the DeFi craze. But you did like the opposite. You went like for Dash, and then you got hit, and now you're getting for the next thing that. So what do you see different from the second wave of tokens compared to the first one? And
Yeah.
how come I mean, you obviously saw value in Bitcoin because you're like 100% Dash, and then now you have like one third of your balance sheet
Yeah.
in Bitcoin.
And it wasn't that
But
we didn't like Bitcoin initially. We had to have an operating business, otherwise we'd be considered an investment fund. And for us, it was critical to have an operating business. And that was the only token that we could actually invest in that would become an operating business. So for us, that was the thing. That was what we needed to do. Um, did we need to put 20 million into it? Probably not. But we all learned our lessons, and we clawed back from that. Now, DeFi is interesting, and you have to remember our investments in these new sort of nascent projects that are super high risk. I mean, we're already in a high risk space just being in cryptocurrency, so we're high risk in a high risk space. So, I mean, we allocate it's like less than 5% of our assets is allocated to that, if even that. So it's all about timing on that. So our DeFi investment was probably, a couple hundred, $300,000. Like it was nothing, but it turned into, 10 million.
Oh, wow. Okay.
So it's the multiples coming off the bottom. We didn't buy the top of DeFi and watch it collapse. Certainly, we watched some of our gains collapse, so probably a lot of them, but we were able to pull out revenues throughout. So I think we probably came out ahead. But if we had got out in early 2022 in January, we probably would have done a lot better. Obviously, you never can call that top, but
Yeah. So
so
what was your top DeFi picks back then? Like what made the
oh,
most
Phantom,
killing?
Phantom.
Phantom.
Phantom. Yeah. Phantom we got in, I think like sub 1 cent or 1 cent.
And how and what was the process that you followed after getting hit on Dash? Saying, okay, I'm gonna find the next big thing.
Yeah. Yeah.
Well,
Basically, I mean, so we know a lot of people in the industry, obviously. So we're always following the space and we're talking to people. So we had some contacts who said, "Hey, this project's looking really good. It's developing really quickly. It's going to be inexpensive. It's fast. It's a great ecosystem, and there's going to be a lot built on it." And that came true to a T. And so we said, "Okay, well, who really knows? You never know. I mean, there's a million projects out there, and after all these ICOs, it all collapsed.
hmm,
You never know. So we allocated a small amount of money, in the compared to what our NAV was. So probably less than $200,000. But we got in so early, and we just leave it because it's so little money to a company like us. We just left it and let it ride. And before we knew it, we were climbing back into a bull cycle. We picked up this phantom at a couple pennies, and it went to $3, $5. So it's super lucrative. So we took those earnings, and as it was climbing, we put them into different projects and different things. So
okay,
but,
I
but
see.
that's where we started to like really really earn. So that was where we were really able to capitalize on the DeFi space and pull that income out. Now the DeFi explosion was, it was like really, it was 3-4 months of like really like lucrative times before it all fell apart. But I'm a firm believer in DeFi. I mean, DeFi is not going anywhere. DeFi is here to stay, and it's only going to get bigger and more reliable. So that was the experimental DeFi phase, I would say, and I'd say next bull run will be something different and probably much more reliable and stable.
Okay, so I mean, talking to you, I feel like I'm talking to like your company is a Berkshire Hathaway of crypto, basically,
Kind
where
of,
you
yeah,
find like
yeah,
what
yeah,
they are there, and you trade with your own money, and you try to generate
totally.
investment returns actually for your shareholders.
Yeah.
So,
Yeah.
so
So we have our bread and
what's
butter. Our bread and butter is which is just the mining stuff that just chugs away. And then
okay?
everything else is us trying to use our brains and trying to be on the forefront of the new technologies and the new tokens and use that to really leverage ourselves into the system. We don't want to raise capital, and I always tell our shareholders, and we keep a lot of cash in the sidelines, so we don't have to raise capital, and we don't have to dilute shareholders. So we haven't raised any money in 2 years, and we probably won't raise any money until our stock's a new high. So I'm a firm believer in a solid cap table, and that's what people like over time. You raise money at the top, and then you buy at the bottom. And I think the last run has been a good example of that.
so
Problems with
what?
the last run, yeah. There's been lots of problems with the
Yeah,
last run, but we can talk about that too.
yeah. So yeah, exactly. So what? Because if you look at Berkshire Hathaway, Warren Buffett have like investment principles.
Yeah.
What would be Neptune's investment principles or your investment principles when you look at crypto projects or when you deploy capital or not
Mhm.
deploy capital? Like, do you consider yourself today in capital depletion mode or in risk averse mode? How
Yeah,
do you
we're
apply
we're
like principles behind that?
yeah. So the way we look at it is, hey, we always want to have some cash. So we're going to deploy more cash, obviously, when we think that the market is coming back and we're still in a good buying opportunity. So we have been deploying more cash in the last couple of months because things look like they're coming off the bottom. There's a little more activity. Bitcoin's shown nice growth for the last 12 months, looking pretty strong. That said, we're still wary. I think this is very, very early stages. We could have some surprise pullbacks, that sort of thing. So we're very aware of that. But we have our bread and butter operations, which is our proof of work and our proof of stake, and those sort of just chug on, and they're just like regular revenue, and that's a good chunk of our business, and that's what we would deem as lower risk. I mean, we're going to see the principal move up and down with the price of the underlying crypto, but that's the bread and butter, and that's just going to keep generating revenue for us. And then we have our high risk capital, and we're talking like brand new projects. Like we're spending right now. We're buying some AI tokens. We like the AI space, but there's gonna be a lot of AI tokens that actually really aren't and don't do much. So we're really careful, and we're sort of picking through what's out there and looking for the next best thing in the AI space. We're looking at some DeFi projects that like essentially are untouched at this point in time, and no one's really talking about them or investing in them because everybody's been so burnt in the last 2 years. It's going to take new highs to bring in that next round of investors. And so between now and then is really the time to invest and buy these projects, because that's where you get your 100x and your 200x. And so we're not going to hit on all of these. Some of these are just going to be disasters. We're going to miss, and we could lose all our money. But that's going to be such a small percentage of what our NAV is. And we're talking, the investments in the high risk projects at this point in time is measured in probably 100 grand, something like that. They're very small investments, but those 100 grands turn into sometimes $5-10 million at the top of the bull cycle. And we've seen this before. So it sounds like very little money, but it can get pretty exciting really quickly.
Okay, but if you think about it, the best location to do what you're doing is in a VC fund, because you're gonna seed the project and get those tokens for free. And with the seeding money is gonna be spent on marketing, which is gonna hype your token, and this is where you're gonna have a much quicker way to do 100x than just being the one on the
Yeah,
buying side when the VC is selling his tokens.
yeah, but I mean, these aren't our tokens. I mean, we're looking for projects, and at the end of the day, we're still just we're still Bitcoin focused. We're still a Bitcoin miner, right? So
Okay,
when we're talking about this high risk stuff, we're talking about the side projects. That's not
okay,
our
I see.
mainstay business. Our mainstay business is proof of stake and proof of work. That's
Okay,
our mainstay business. And so, and and the caveat to that is that I think proof of work is sort of on its way out. I think the strategy around proof of work for us is going to be, how do we manage all the variables? How do we grow our hash rate without growing mining operations? So there's some interesting ways of looking at that. I feel like what's going to happen is that there's going to be probably 3 or 4 major Bitcoin miners in the United States. They're going to be mostly power companies, and they're going to turn on and off Bitcoin miners as need be. But they'll mostly be power generation companies because the margins are just so small now. And we're coming up to a halving, which is going to be a big question mark for everybody, whether it's going to be even profitable to mine at all anymore. So if we don't see a big increase in the price of Bitcoin, people are going to be in trouble. And if you want to stay in business and pay your power bills, you're going to be selling your Bitcoin. So what does that do to the price of Bitcoin? And what does that do to your entity? Now you've sort of lost that upside. So for us, again, back to our mainstay business, proof of stake is much more lucrative for us.
okay. And how do you do the proof of stake? Is Ethereum or
Yeah, yeah,
other protocols?
a whole diversified array, I would say. So Cosmos Atom is a big one for us. So
Okay,
Cosmos Atom, we got in really early. At the time, we had a director on our board of directors who knew the guys involved with the project. So we got in really early at that. Maybe it was $1.50 or something like that. So today, it's approaching $9-10. So, and at the top of the market, that was $42 too. So we had millions and millions of dollars in Cosmos Atom generating $500 million a year or something like that, because it pays about 20%. And so we could take those rewards and we could use them for things. So we're still doing that today. So we use those rewards to invest in other proof of stake coins or buy Bitcoin. So Cosmos Atom is one. Ethereum, we're growing our Ethereum staking. So we do that. We delegate our Cosmos Atom. We stake DOT. Solana has been a great one for us. Solana has performed, extraordinarily well over the last 12 months, and everybody's talking about Solana now. So I'm very happy we got into that. So Solana is another one. We stake a little bit of Ocean, which is an AI token. A very small investment in that, but we're watching that closely. I don't know if you've heard of Graph, which is which is also an AI token. So we have a fairly large and growing bag of Graph, and we're not staking that yet, but we will be likely shortly. So that's growing, and it's getting rebalanced all the time. So we're rebalancing those investments and with the delegated tokens, and we are running a validator as well. We're running a validator for Cosmos Atom, but we toy around with different ideas and what's most lucrative for us.
Yeah, I wanted to pinpoint the AI tokens. I mean, for me, like when I saw this whole AI craze, I immediately thought that it would be a huge promoter for Bitcoin, because like it's a uncensored, unbreakable, always up technology.
Mm-hmm.
But then I saw these AI tokens coming up, so I was kind of put back in my conviction. What's your conviction regarding those AI tokens, and where do you see them evolving? Is it just a marketing gig, or there is like some real value to bring
I
to
think
the space?
I think you're right. I think first point, it's going to be a lot of marketing. There's going to be a lot of hype. And we do invest in hype because you can make a lot of money investing in hype. Does it have longevity? Maybe, maybe not. One in 1,000 projects are going to have real longevity. And what is that longevity? Is it, are we talking 20 years? In this space, longevity is like a year. But like real longevity is Bitcoin, right? That's a decade now. And that's like, the grandfather, the OG of crypto. So, and that's the full cycle. And that's been around since inception. And that was the inception. So to your point, yeah, the AI tokens, I would say those are highly risky, and they could be total flops, but we try and pick a couple that we thought might have some potential. Our CEO is really good at that. He really digs down into each one of these, and he can probably speak more to the individual ones. But Ocean, Graph, and there's another one that we're looking at as well. I forget the name of it. Or two that we're going to take or three that we're going to take a punt on. And if they don't work, it's such a small investment for us. It's very small. And at the end of the day, the bull market, rising tide sort of floats all boats mentality. So, if these things appreciate in value, but we don't see that they have longevity, then we're going to obviously liquidate those positions and flip it back into Bitcoin.
So you're
And we
more
do,
opportunistic
yeah,
around it than
totally.
fundamental. Okay, I got
Yeah.
it.
Because at the end of the day, what's important to us is making money to buy Bitcoin. It
Okay.
all comes back to that, right? At the end of the day, I just want to have more Bitcoin, and however I can do that. So new projects are great, and some of them have longevity, and we'll probably stick with those a little bit. But at the end of the day, those rewards are still flowing back to BTC.
Okay. And you mentioned your conviction on DeFi, but why do you think it's gonna last? You have been like struggling with regulators in the past, and you're dealing with regulators as listed company
Yeah.
even today. And when you look at the SEC requalification of everything as a security, even in Europe, we have the UK that is applying the same rules on crypto as equities or financial instruments.
Mhm.
I struggle to see how DeFi cannot be regulated to the point of extinction. See what I mean? Compared to Bitcoin, that is regulatory proof or regulatory resistant, because all these DeFi protocols, they are facilitating, or they need, like, there is a smart contract or whatever tech
Mm-hmm.
it is behind it, but they need somebody on top of them to show the end user, to make it easy to access, easy to
Yeah.
do it. So staking today in the US is super complicated. Offering staking, technically they cannot ban it, but by regulating it, it becomes impossible, and they could kill it. How do you see it evolving from a regulatory perspective, the DeFi
Yeah.
space?
I think it's unkillable. So have you watched the Netflix special on Spotify?
No.
It's a great show because I mean, basically it's the same thing. I mean, when file sharing came out, it was a big all the regulators and everybody was trying to fight it. I mean, this is just the way technology is. Something new comes along,
The
and
Spotify founders, the Spotify story, yeah. But hold on, in the Spotify story, there were like these big companies holding the rights, and they had to
mhm,
find an agreement, and he was like close to shut it down, right?
yes,
If you
yes.
recall.
I'm just using it as a general like technology that works really, really well. You can't,
Okay.
I find, I don't think that you can kill it. So I think eventually it's going to evolve into a situation where it works and the government is able to regulate and oversee smart contracts. And so all you're doing at the end of the day is that you're pulling out the middleman. Yes, there'll have to be somebody to oversee smart contracts and what they do and sort of dig into them and make sure they're legal. But they're so much better. I mean, it's so much faster, it's much easier, and you take out, and it's more efficient economically. You're just taking out the middleman. You're taking out the banks. I mean, this is terrifying to the banks. I mean, if I was a bank, I'd be super worried. But I think these things are going to evolve to the point where the regulators can sort of wrap their mind around it. We're far from that right now. I don't disagree with you. I think it's difficult, but I've been hearing, forever. I've always been hearing about the government killing Bitcoin, killing this or killing that. And I think like if technology works really well and it's capable of evolving and mass adoption, I just don't think you can kill it or ban it or stop it. I'm in that camp, but I mean, some people are in the camp that you can. I mean, the SEC seems to be just. I mean, the whole thing is just mind-boggling to me that there's ETFs everywhere in the world, but the U.S. is just, digging their heels in and battling it to the final straw. I mean, it's like it's done. I mean, it's over. The ETFs are going to happen. I don't know why they're doing this, and it makes no sense to me. It seems like they're just trying to justify their budget. so
Actually,
so
I mean, as a regulated company and heading Millennium Capital for the past 10 years, and dealing with the regulator from a financial institution side of things, the main argument is investor protection. Okay.
mm,
So
hmm
you will always see this team promoting 20% yield on a DeFi protocol, like lend
hmm
your token, you get 20%, etc. And this is going to stop at the end. It's like when the internet started, you had a lot of online casinos, and
hmm
it was like a rush towards online casinos. There's a nice movie actually with Justin Timberlake and Ben Affleck talking about it, and then they
yeah,
shut them down. They
yeah,
regulated them to the point of extinction or to the point of illegality. So now, if you want to run an online casino and target US customer, you either need to be like very closely tied to North Korea, or I don't know what kind of
but it's a
government.
very lucrative business for the guys running these online casinos. Even in the U.S., they do very well still
Yeah,
post
actually,
regulation.
there is one that is doing. I heard about Stake. I think it's called something like that.
Yeah,
Doing very well.
yeah,
There are crypto casinos today, but my point is that uh, the all the banking regulation, because I have worked 10 years in the bank, and I know how
mm,
heavy the regulation is.
Yep.
last 10 years at Millennium Capital, and I know how heavy the regulation is. And it's all in the name of investor protection at the end. And it's kind of unstoppable, this regulatory pressure whenever you talk about money,
Hmm.
to make sure you have like tons of requirements wherever you talk about it. So all this DeFi is just financial instruments or financial transactions or financial stuff. So you go into the investor protection space.
Hmm. Yeah, and there is a future where you can have decentralized projects and investor protection. And I would argue that it's going to be. I mean, when we say investor protection today, I mean, are investors really that protected? I mean, I can put my money in a savings account in a state bank, and that bank can go bankrupt. And if the government doesn't step up and bail you out, you're in trouble. So we know, and we see it all the time, that we're somewhat protected, but we're not really fully protected. I mean, there is potential for loss, and there are risks associated with investing in anything. So, but I think there is a world where you can regulate and protect within the realms of the laws, protect investors when they invest in this stuff. But there's always going to be fraud, and there's always going to be risk out there, whether it's crypto, DeFi world, or just bread and butter finance world, or investing in stocks. There's always fraud out there, and it's just something that we all have to be aware of and have to know the risks when we're investing. But
Okay, I
I
see.
certainly am a believer that DeFi is here to stay, and it's an evolving space. And we saw the wild west of the first foray into DeFi in the last 2 years here, and it ended in disaster with obviously all these bankruptcies and people losing a lot of money. So that's unfortunate, and it seems to be the growth trajectory in this space, unfortunately. But yeah, I do believe it's the future of finance.
Okay. One last question regarding your structure. Why didn't you structure it as a fund instead of a listed company? Because what I have seen from what you're describing is could be structured in a fund. Why did you go the company route?
Well, initially it wasn't. I mean, initially we had wanted to do a fund, and then we decided, it's more fun to have a revenue generating business and an operating business, and we wanted people to trade in and out of it. We wanted it to be a trading vehicle with exposure to both revenues and investments, and so that made the most sense to us. And the fund is a little more burdensome to operate. So we just decided this is the route we wanted to take, and that's my expertise is running these public companies, and that's my background. So it was an easy sort of path for me to take.
It is, especially I think in crypto, because we've launched also crypto funds, and I saw the complication just to launch a crypto fund also, like
Hmm.
to be fit with regulation and finding the service providers of the fund, etc. So a
Tough.
company is definitely easier to do, but
Yeah.
at the same time, it doesn't give you the flexibility to raise capital as much as you can. I mean, I
Yeah.
don't know if you do it, but there's a lot of Bitcoin equities in our universe. They raise on a constant basis capital. There is on Nasdaq some system where you can sell on the close
Yep.
shares, and then you raise money, and you go and buy Bitcoin, and you do it on and on and on,
Yeah. That's
and
called
you
the at the market system. So you're always raising, and the banks like that because they're always just selling your stock into the market. Whatever percentage you agree to, and you're always raising money. I don't like that because I don't want to dilute the company. I'm the largest shareholder, and I want to make sure that we raise strategically. So I want to raise money, when we're 10, 15x NAV, and then I want to buy tokens when the market is at the bottom of the bear trough. So I want to time it to be sort of opportunistic, and we don't need capital on a regular basis. and our share price is low. So why would I do an at the market right now? We're just diluting everybody down. So I'm a firm believer in capital structure. If you're a large mining company, it's probably not a big deal, and you need to generate that cash flow to pay your power bills and grow your entity. It's not cheap running these power and mining companies. So they probably need to do that. And I would add to that like, most of the people who raised in the last bull run have run out of money. So they have no choice but to raise capital. One could argue you should always be raising capital, but for me, that's just not how I see it. And
And
generally, our shareholders don't like that.
and why don't you stay private? Why did you go public? Because normally in the process you go public like at the end, once you have like deployed as much capital as you want, so you don't have the hurdles of the market. So if you're not raising capital from the market, you're just taking all the constraints to operating a publicly listed
Yes,
company. Why
100%.
didn't you stay private?
Well, trust me, I have moments where I wish we were private. Over the last 2 years, every day. But in the
You-
bull cycles, I'm so happy we're public because we can give people exposure to this super exciting stuff. I find it very exciting. I want to share it, and we can raise as much money as we want, at a premium. So
okay.
so it's a give and take, and certainly we've considered it. We said initially we went public because we wanted to raise capital. So we went public because we knew that we could access $20 million. And we had stayed private, it might have been $2 million or $5 million. So we knew we could raise more. So that made sense. But in the bear market, every day I wish we were private. Yeah. I mean, seeing your stock price languish, undervalued, it's not a good feeling. And so all you can do is try and create that value, and know that eventually people are going to recognize that and come in and buy the stock.
And don't you see value into trading your shares? Like doing buyback when the stock is too low, and doing capital raises when it's correctly valued
Yeah.
and stuff
So
like that.
a lot of people ask me about share buyback because we have a lot of cash. But my argument would be, would you rather have me pump the stock, because that's essentially what the share buyback is going to do? I'm gonna artificially inflate our stock by reducing our share count, or would I rather buy Bitcoin with it or invest in projects? I mean, we're a company to invest in projects, not buy our own stock back. So I think there's a lot more value in us putting that cash to use in the market, at the bottom of the market, rather than buy
S-
buy our stock back.
So it means that your stock price didn't drop enough to the point where
I guess.
buying
Well, the shares are being bought back by me. Yeah.
OPA, actually you can do it yourself when you think it's
Well, totally. I mean, it's a
uh,
no-brainer for me and our management team when we see our stock trading at a discount to NAV and our revenues being valued at zero. So to me, it's mind-boggling, and I think to myself, well, doesn't anybody look at our financials? Don't they understand the value? But I'm obviously biased because I'm management, and I'm the founder. So to me, it's a no-brainer, and I buy as much stock as I can, and I'm trying to get to 20% of the company at some point in time. I think I'm about 12 or 13% now, but most of that I bought at the bear market, when nobody's paying attention, and our stock is, at a discount to NAV, and our revenues are valued at zero. So to me, that's a really compelling case to buy the stock. At some point in time, those people who bought that at a discount, our stock will be 10x NAV, and our revenues will have another valuation that who knows what it will be. But in the froth of the bull market, will probably be a multi-dollar stock, $2 to $10. Who knows? Sky's the limit, and depending where the price of Bitcoin goes. So it's terrible in the bear market, and it's super exciting, and it's a big adrenaline rush in the bull market. And so right now we're starting to just come off the bear market bottom. So I'm feeling a little more optimistic.
okay. So I hope you'll 10x next time we'll have you on the show.
Totally,
Unfortunately,
yeah.
we have to wrap it up.
Yeah,
It
yeah.
was
Really nice
a
talking to you.
very pleasure having you, and thanks a lot. Very interesting conversation. I'm happy to have discovered more in detail what you were doing, and
For
I'm
sure.
going to be following your press releases and announcements as they come.
Yeah, please do. And happy to come on the show anytime.
Okay, thanks a lot.
Thank you.